So Tesla's 2018 pay package has been ratified. It has been reapproved for the $56 billion pay package for Tesla and for Elon Musk. So we've got lots to discuss in this video. Make sure that you drop a like and subscribe to the channel, and also do check out the link down below if you're interested in joining us for our MoneyVest beta launch that's going to be happening on July 8th. And right now we've got a 51% discount with very limited spots left if you want to access this platform on that day. And after that, this heavy discounting is going to go away. So link's going to be down below. First things first, breaking news: Tesla shareholders officially reapproved Elon's $56 billion pay package. Congrats to Elon Musk. And he himself also tweeted that both Tesla shareholders' resolutions are currently passing by wide margins. Thank you for your support. For the record, I voted for ratifying his 2018 pay package of $56 billion, and everybody who voted against, really, I don't even know what they were thinking, because 2018, a deal is a deal. It was already done and approved. Of course, the Delaware judge obviously contesting it. And of course, we got into this mess. But at the same time, we are ratifying it after 5.5, close to 6 years of going through this struggle. And again, thank you for your support is what Elon Musk says. And then, Hallmark's catalog tweeted, okay, Elon Musk, we got you the options. Now you have to make Tesla the most valuable company on earth. Deal? He says, yes. So that's what he responded to his tweet here. So that, again, is a pretty big deal. This is literally from just a few hours ago, just considering how much momentum. And again, this was supposed to be a positive catalyst for Tesla. And well, guess what? It is. Tesla up overnight on Robinhood because it's got 24 hours trading, and it's now trading at over $190, up almost 4% yesterday, and up another 7% pre-market here. On Robinhood, with a huge spike after the original pre-approvals here from the votes. And of course, after being counted, we are seeing over 70% of voters. So 73% of Tesla shareholders ratify Elon's 2018 comp package, same as in 2018 as well. So very, very strong number of votes coming in favor of ratifying Elon's 2018 pay package of $57 billion as well. Some of the bigger institutional investors, we do have some, again, of course, voting against. Even Ross Gerber from GK voted against, and I saw that video. It was actually quite nasty. I mean, Ross Gerber really has turned pessimistic and bearish on Elon Musk and Tesla. But of course, we did have Baron Capital. We got, Altmeter. We got ARK Invest, of course, voting in favor and for Elon Musk's $56 billion pay package as well. And speaking of ARK Invest and Tesla here, $2,600 in expected value for Tesla in 2029. So I wanted to break this down because we were talking about this during our live stream. So absolutely insane price target for Tesla, and that's going to really just be about a 15 times increase from its current value, and the market cap at $2,600 is going to be close to $7 to $7.5 trillion for the company as well. So that is, of course, quite insane if you think about just the numbers in 5 years from Tesla is what they're expecting, what ARK Invest is expecting. But first and foremost, again, I want a huge congratulations to everyone, all Tesla shareholders. I also mentioned this in our Instagram and also in our Discord that if you are a Tesla shareholder, make sure that you do participate in the poll. Make sure that you do vote your say. And again, this was already a done deal back in 2018. Ross Gerber highlighting, the poor management, or essentially saying the board of directors did not, manage the company well, or they're just a complete mess, and they should be taught in business schools on how to not manage a company because there was no negotiations on the pay package. It was just a really nasty interview from Ross Gerber at GK. But nonetheless, he mentioned that there's going to be a 50% chance whether it gets passed or not. 73% voting in favor for this pay package just goes to show that retail community and especially institutional community still believes in Tesla, still believes in Elon Musk and the vision that it has for pivoting over more towards robo-taxis and of course artificial intelligence as well. This is exactly what Gary Black also said. Tesla is at a pivot and they're now going to robo-taxis and AI. Who do you want running the firm? If you're doing that, you want Elon Musk is what he mentioned. And again, Elon Musk very happy with the support, tweeting out, thank you for your support as well, with a very, very wide margin win for this 2018 pay package. So let's just break down this report a little bit. So ARK's updated open source Tesla model yields an expected value of $2,600 per share in 2019. The bull and the bear case tuned to the 75th and the 25th percentile Monte Carlo. Outcomes respectively are approximately $3,100 and $2,000. So even in their bear case, they're at $2,000, which is almost going to be 10x from here, a little over 10x from where it's trading at the moment, because right now 190, if that's going to be the pre-market price, 10x is going to be $1,900, and just a little bit over 10x is going to be $2,000, and that's their bear case by 2019. And this research update presents ARK's open source Tesla model, which incorporates distributions for 45 independent inputs to simulate the range of potential outcomes for a company and its stock. Now the problem, well, I guess this is, you could call this a very deep dive, a very detailed analysis and whatnot, but the problem is that it's got a lot of moving parts. It's got 45 independent inputs, right? This is what ARK Invest has to, essentially put in. These are the metrics that they are plugging in assumptions for. And, your research is only as good as your inputs. Your outputs are only as good as your inputs, right? So these 45 independent inputs, there's just so many permutations and combinations for what this could be. And that's, again, is exactly where the Monte Carlo is. So we obviously are going from, let's say, the bearish and the most bullish case analysis, but $2,600 is the expected value. The projection in our expected value for Tesla stock price in 2029 based on the Monte Carlo analysis, $2,000 is going to be the 25th percentile, and $3,100 is going to be the 75th percentile. And the probability is Tesla reward $3,400 per share more in 2029 is 25% also. So we are in those 75th and 25th percentile here for 2,000 and 3,100, and 2,600 being, again, the median value for the Monte Carlo. And again, no autonomy. We're looking at $350, and with the most bullish, we are sitting at a little bit over, I guess, $5,500, and that's the 1% probability on either side, right? So that's where we are with the range of possible outcomes for Tesla. Now, ARK estimates that nearly 90% of Tesla's enterprise value and earnings will be attributed to the robotaxi business in 2029. So 90% of all earnings will be coming from robotaxis, as shown below. Meanwhile, electric vehicles could approximate a quarter of total sales and 10% of Tesla's earnings potential. As we believe the robotaxi business will have a much higher margins, the charts below break down the attributable revenue, EBITDA, and enterprise value by business line as well. So what we have over here is revenue by business line is expected to value case $1.2 trillion in revenue, of which 26%, a quarter of that, is coming from electric vehicles, 63% is coming from robotaxis, and 10% is coming from stationary energy storage, and about insurance is going to be a very, very small piece. When it comes to EBITDA, $440 billion in earnings before interest, taxes, and depreciation, only 10% margins for EVs, 86% margins for robotaxis, and 3% for energy storage. And enterprise value by business line, 88%. So basically almost 90% of the enterprise value of Tesla is going to come from robotaxis, and 9% is going to come from electric vehicles. Now, this is really, very, very optimistic, very bullish estimates that robotaxi business is going to absolutely crush it. Not only are we banking on proper and perfect execution, we're also banking on adoption. We're also banking on margins. We're banking on a lot of estimates here, and a lot of things that need to go right in order for this to actually work, because this entire thesis is built on robotaxis. Not dismissing it, but just sharing the idea that, okay, a lot has to go well, a lot has to go right, and be executed well and adopted well in order for this to actually work out. A much better, more safer, more conservative way to analyze Tesla, which is what I also use, is that I look at all of this as the cherry on top, right? This is something that if it happens, fantastic. If it doesn't happen, that's not the sole reason why I'd be investing in this company. The sole reason should really be the business that it is today, right? And the business that it is today is electric vehicles. That's the 26%, 27% that ARK Invest is kind of valuing revenue-wise, and 10% for EBITDA, and 9% for the enterprise value. So this is really, why I'd be interested in sort of investing in Tesla. And if you look at electric vehicles, if they are, let's say, assuming for $7 trillion by 2029, and if you look at 9% of that, so 7 trillion, times 0.09, that's about 630 billion. So $630 billion from today's value is still going to be a bit of an increase. That to me is a more conservative approach that, okay, by 2029, if none of this happens, if none of the green stuff happens here, right? None of the robo-taxis, autonomous driving, none of that happens. It just simply continues to be just an electric vehicle auto manufacturers and sells cars that at least that it could, achieve or demand over $500 billion in market cap. It already is over 500 billion. You can get up to over 630, close to $700 billion in market cap by that time. So this right here is going to be the estimate. So really what I'm banking on is this 14.4 to 15 million vehicle sales by 2029, an electric vehicle revenue of almost $400 billion. So this is what their expectations are for bull case. And again, the bear case is going to be over here, 5.8 million, $250 billion in revenue, $600 billion in autonomous ride-hail revenue. So a 951, so almost $1 trillion in revenue for the company in ride-hail in their bull case. Gross margins of 56 to 53% because of the higher margin business, and EBITDA at 32%. Enterprise value to EBITDA multiple of under 17 to a little bit over 18, and market cap sitting at 7 to as much as 10, almost $11 trillion for the company, and share price and CAGR 56% over the next 4 or 5 years annually, and 69%. How did that work out? 69% on an annualized basis for the company, and free cash flow yields of 4.3 and 4.1% respectively. So the bottom line is that this entire thesis is dependent on one thing and one thing alone, and that is robotaxis. If that doesn't happen, of course, Tesla is going to find it very difficult to actually appreciate in that value. So we'll see, how Elon Musk executes and make the adoption for robotaxis more widely utilized. But that is really what the whole consensus is. And I think it's a much better approach to kind of invest conservatively and be surprised to the upside and have a pleasant surprise than invest aggressively and then be disappointed, right? I'd much rather be, conservative and right than be aggressive and wrong. Something that I've mentioned time and time again, that I'd much rather be conservative and right, meaning that I might invest conservatively and then be right on the higher side, on the upside of pleasant surprises, then aggressively, and of course get disappointed on the downside, because that, again, the latter is not going to be super good. This right here is miles per crash on surface streets, and Tesla, of course, one of the safest vehicles out there. It takes over 3,200 miles on average for one crash to occur, versus some of the other metrics here. So Waymo, 476 miles. National average is 192 miles. Cruise is going to be 43 miles. And then we got a human-driven Tesla's, 588. So Tesla in FSD is significantly far more, multiple times safer than it is by human-driven car, Waymo, or national average as well. So again, these vehicles are safe, and they've got, that safety rating as being very, very high. Now, coming over to Tesla stock price here. So if you come over to the daily time frame, so we're still kind of dealing with that area of resistance, because if you come over to the Tesla stock, we've got a huge area of supply right over here. So tomorrow is going to be a very, very important and a big day for Tesla, and we're going to find out whether we see a breakout above $200 or not. We're already almost at 190 according to Robinhood 24 hours trading. We're going to find out that where pre-market opens in about a couple hours, but a huge area of supply and resistance in the 190 to as much as 210. So you got that $20 range for Tesla inside this red rectangle. And of course, eventually we'll find out whether we break out to the upside or not. And if we do, then we got a target up to as much as $280 to as much as $300 for Tesla. So that is going to be that next level and that next target to watch for Tesla. So hope you all enjoyed this video. Let me know your thoughts down in the comment section below. Huge news and a breaking catalyst here for Tesla here. Huge moment, and of course massive aggressive move to the upside pre-market. So as always, make sure that you drop a like, subscribe to the channel. Don't forget, links to our Discord and Patreon is going to be down below if you want to join. Of course, get beta access to the MoneyVest platform, 51% discount right now until July 8th. Limited spots left. Links going to be down below. As always, happy investing. I'll see you all in the next video.